Okay, hello guys. I hope you can see me and hear me. Let me just make sure. If you can, please do leave a message in the chat that you can see me, you can hear me, and we'll just wait. Oh, perfect. Hello, Chaitanya. Hello, FX Somesh. Hello, everyone. Welcome to another live stream market analysis. Ken is joining any second. Should be at least. Yeah, he's just confirming. So hello. Let's wait for him for a few seconds. He should be here in a minute. Before before we dive in, maybe what I'm going to do is that I'm going to test my internet connection, because on the yesterday's live stream I was making fun of that uh, I don't pay my internet bills and that my internet is like my trading style unstable, or that I'm riding a horse to get to the office, that my email is being sent by Roman Centurion. So just to make sure, guys, I'm going to run the speed test and probably share it so I can show you wrong. Ken is already here, so let's invite him as well. Hello, Ken.
Hey Jake, how you doing?
Hey, doing great. How about you?
Good man. Yeah, I'm good.
Perfect.
Very well.
Great to hear that. I'm
Markets
just.
fireworks today.
Oh yeah. To be honest, since yesterday I didn't check. Today I was extremely busy.
Yeah.
But yeah, I will probably be analyzing markets as the you go and then jump in. I was just saying to chat that before we dive in, I'm doing the internet connection because I don't think it was actually an internet connection issue, because usually I have about 400 to 500 megabytes, which is not like something extremely good, but it should be enough.
I saw that. I saw that posted on the channel. That was hilarious.
Yeah. I don't want to repeat the same mistake, like being 30 minutes.
And the funny thing was, like, people were roasting you as well. Like, Jake forgot to pay for the internet.
Yeah. I was just saying. I was before you joined. I was reminding them.
Yeah.
Making fun of me is also allowed. I'm not going to ban you or exclude you from the giveaway. I kind of like it, so yeah.
Good banter.
Go ahead, guys. But I'll make sure I'm good for today. Okay, let me also open the trading view. Quickly rebooted the computer. Okay. Anything that you traded lately yourself?
Yeah, I took some shorts today with Euro. Well, I had some shorts yesterday running. Okay. I added some shorts today, which I'll talk through in a moment.
Still holding, or you already closed it?
Yeah, I had an intraday. Well, the one I took last night, it was yesterday, sort of late yesterday session. I closed literally not long ago, and then I have a runner at the moment, which I'm going to walk you guys through. So it's looking good, to be honest. And I'll talk you guys through as to why. But yeah, man, just this dollar. I said it last week that we were at this point where the dollar could have this turning point, and we freaking got it. This is it now. This is a massive turning point for the dollar. The dollar's coming back. It's roaring back, guys. As big as a dollar bear I've been over these past streams for many weeks. Well, for months I've been a dollar bear. I am now. My hat has changed, guys. Okay, and I'm going to walk you through it. But it's changed.
Today was. Okay, today Euro USD, GBP USD, we are getting close to 1.33. We're breaking 1.34. Okay, didn't know that. Yeah, I was saying today I was out, but yeah, seeing the dollar was happening, that's massive volatility.
Yeah, man.
I'm interested in why. Okay, yeah. So yeah, I think, guys, we can dive in. Let's Ken to share his screen.
Yeah.
At the same time, just whoever wasn't here last time. Also, we had a few traders who actually passed the giveaway, and yesterday on the chat there was Amu who already got the payout from the giveaway. So congratulations. And also we are having, as we speak, 2 more guys who are passing. Congratulations, guys. Looks promising. Maybe at the very end of the live stream, I can show you their dashboard, how the day passed it. So we can take a look at that as well.
Okay. Awesome. All right, let me share my screen.
Hello, Alec. How are you? Is that
okay
word for today?
All right. Share. Okay. Let's put this here.
Having any technical issues yourself?
No. I'll just get everything ready. Here we go. Right,
yeah,
ready.
no problem.
Okay, River. All right. Now I've minimized the. Oh yeah. Now I'm having a minor issue because I'm trying to find the. Wait, Jake.
Yes.
Okay. No, I can't find the the riverbed. I don't know where it's going. Is it riverbed?
Riverside?
Riverside, sorry, riverbed.
Yeah, it's.
I'm trying to find it. It's disappeared. It's from.
Yeah,
it's gone.
In the tab. You should have it in some sort of a tab on your browser. Are you using Chrome?
Yeah.
Okay. And you don't see it anywhere.
Oh no! Ignore me. Do you know it went to Microsoft Edge? I don't know why it's gone to Edge.
Oh.
So strange. I never use Edge. Don't know what happened there. Okay, here we go. Right. Let me. Oh no! All right, I'm gonna have to.
Yeah, you need to
guys.
disconnect and connect again from Google, from Chrome. Yeah.
Yeah, because I don't use Microsoft Edge, but
yeah, no one does, mate. No one does. So it's
yeah,
okay.
I'll just talk anyway, just while this sort of connects. Or is it
I think you'll get disconnected once you close the Edge, and then once you connect with the.
Okay, I'm just waiting to get in again.
Okay.
Here we go. Here we go.
Okay, and for a little bit of change, yesterday you weren't able to see me, and today you're not able to see Ken. Ken, if you can hear me, probably just do refresh the page because you were using the same camera. Okay. Let's read the chat. Which instruments in focus today? Okay, guys. So today we are going to talk about dollar because it was it is pretty volatile right now. Ken is joining back. It is pretty volatile, so we're going to cover mostly Ken, and I'll be analyzing as he speaks. Yeah, he's back. So dollar, and then some major events for this week. And also,
guys,
if you
quick
have
question to the chat. Sorry, Jake.
Yeah.
Yeah, you're delayed. Guys, am I delayed or is Jake delayed? Can anyone notice? Oh, here we go.
I don't think we're delayed.
No, you're good. Sorry.
Yeah.
You're really lagging on my side. All right.
You were playing it on the YouTube like live stream because live stream is always delayed.
Yeah, no. I was watching you here.
Oh, okay.
It's fine anyway. We're all good.
Oh, okay,
right.
Perfect.
All right, let's share screen.
Yeah, guys, if you have any instruments that you would like us to analyze, leave it in chat, and till Ken finishes his analysis, I'll just prepare mine. Okay, it's yours, Ken.
Thank you, Jay. Appreciate it, man. Okay, thank you guys for your patience while we were getting ready there. So, all right, this is interesting, guys. This is a massive game changer. Okay, it's a massive trend changer and a structure potential changer here for the dollar. All right, I want to walk you guys through it. So, you see, obviously, all eyes were on CPI today. See, I know a lot of you look at Forex Factory, but I just wanted to bring up trading economics here so we could just see the other year-over-year figures. Now, all eyes was on the CPI. Now, if we look at CPI, the real key that we're looking at here is the year-over-year, because remember, the year-over-year gives us a bigger view, right? When we have the monthly reading, there's a little bit more volatility there. So even if, for example, you see a slightly lower monthly reading, but then on an annualized, it's higher with more focus on the annualized, because that gives us a bigger view, a bigger understanding, a trend of where inflation's going. And inflation is still trending higher. We're not seeing that cooler in the United States. So before we get onto what that means and everything, look, core inflation rate, actual number 2.9%, above previous of 2.8%. Okay, remember, with the core, it takes out the volatility. The central banks are mainly looking at the core because it strips the volatility of food and energy prices. Then when you look at the year on year here, 2.7% above previous of 2.4. So inflation's rising. It's not cooling. So this is why dollar is breaking out to the upside today. Okay, big breakout of upside. Yields are pushing aggressively to the upside. As you can see, we're up generally around 1% across the twos, the fives, the tens. So yields are up, dollars up, and why? Why are we seeing this move higher now, guys? Anyone drop it in the chat. Drop it in the chat. Why is the dollar moving higher, and why could potentially we have a new trend to the upside for the dollar? Go on, someone drop it in the chat for me. Let me see the answer, baby. Come on. And then I'm going to show you something. No one know. Okay, that's all right. I'll give you details. So the reason why dollar's pushing high now on the higher inflation data is because markets ahead of this decision, okay, and markets for a little while have been pricing in rate cuts. They've been expecting rate cuts to be delivered from the FOMC. The thing is now, where we have higher prices of goods and services, it pushes back some of that expectation now. Markets were expecting at this meeting. So if you bring up Forex Factory, bring up Forex Factory. So at the end of this month, we have the FOMC rate decision. Okay, so let me just pull this up. So not next week, the week after next on Wednesday, we have FOMC rate decision. There, look, you see it on the 30th of July. So markets here were expecting a dovish pivot from Powell for him to be like, okay, inflation's coming down, the economy's cooling. We have the green light to cut rates. And then markets would read that and think, okay, they're cutting rates in the next decision, which will be September. That's not happening. It looks very, very unlikely now because inflation's still sticky as a result of tariffs. So we could see we may only get one cut this year as opposed to markets are pricing 2 to 3 cuts. Right? The interest rate pricing, what people are pricing in has already been shifted back. Okay, so this is dollar's gone clear. Right now, obviously, this trend line was supporting the price. I mean, I don't really give a hell about this trend line, but it's just noteworthy, just where you can see, obviously, structure has been contained. We haven't officially broken bearish structure yet until, for me personally, we invalidate this former lower high. But the way in which we've cleared, this zone here at 97, we are going to push to the upside. It looks very likely. Okay, we need to take out 99s. And then we're going to push back in towards that 100 mark. Okay, when you look on the monthly, look, guys, the next major resistance is that level here, up at towards 101. That's the major resistance. Look, can you see? Yeah, there's freedom here to pass through. Look, freedom to drop. So that will be your next zone to keep an eye out for. Okay, and this is likely to invalidate a lot of bullish structures that we were seeing for the likes of Euro, the likes of GU, all of it. Okay, some serious downside on the cards here, guys, potentially, right? So let me show you Euro for a moment. If we go to the weekly right now, obviously we said last week how there was the potential for this to head to the downside because we saw this evening star. This was invalidated by a bearish engulfing, right? So this typically indicates, when we see this sort of candlestick behavior, indicates that we're going to have a shift in trend. Now, let me make one thing clear. We still, as with the Dixie, we haven't fully broken this structure yet because can you see high, low, high, low, high. We could still print a new higher low here. It's still possible. But right now, the momentum is with the greenback on that high CPI. And I think there is a very, very good chance of structures being broken, bull structures being broken for these dollar pairs. Okay. My Euro shorts, I got in a little bit late yesterday when I was eyeing this up. Okay, look at, you see structure was to the downside on this pullback, right? We're printing lower highs, lower lows. So I was monitoring this. I didn't miss my initial entries, and I'll talk you through where my initial entries are supposed to be. But look, you can see, obviously, guys know I like my flags, I like my pennants. Had a nice little pennant forming there, which was sort of building up the case for a nice little breakout, explosive breakout to the downside. And I mean, freaking goodness me, we did see that today, obviously, on that CPI data. I want to show you where I wanted to enter and where I entered. Okay. So here, so it's on the 30-minute, first of all, where I wanted to enter. So this is where I wanted to enter. You know how I trade, I look for, liquidity sweeps. I really focus on that Asian range high and that Asian range low. I saw obviously price action, as I said, from the higher time frame, from the 4 hour, lower high, lower low, all that good stuff. And then we started ranging, subject to a breakout to the downside. So I was monitoring this and looking for a continuation of this structure to the south. Now, where I get in on my 30-minute on my, it's either the 15 or the 30-minute where I'm looking for entries, but is this Asian range. So it was in the afternoon, I believe. Yep, here, look. So at New York, around New York, when US guys come to the desk, evening start at the top of the Asian range, running into resistance with the highs of the Asian range high. And then we had that rejection below. Okay, so typically when I take this trade, I place stops just above. You see where this evening star is, excuse me. I leave a little bit of breathing room below there. And typically where I'm targeting is just, I will just go for that Asian range low again. Okay, as an intraday trade, as an intraday play. So, and it would also work on the flip side. All right, you see when you get the sweep below, running it to the high. So again, I missed both these trades yesterday. I was quite busy. But we had, look, reversal candlestick, closure above. So this was like my bread and butter with my intradays. You know, this is what I would have taken. You know, but I missed it, which was annoying. And then look, running it to the high. You know, you're getting, look at that risk to reward. Sorry, Jake, did you want to say something?
Yeah, just a quick question, because this is a good one from Mate. If you use sessions, meaning if you know strategy, do you, I think he meant it like this, you do specifically enter in certain sessions, like London session, whenever you see some sort of a pattern repeating or some candlestick formation. Generally speaking, do you use them in your trading?
Do I use sessions what, as an indicator?
Yeah. Not as an indicator, as you, if you consider it whenever you are entering a position, like what's the session now, or is your strategy based on the sessions? Like if you enter only London, not New York.
Oh, right, I see. Typically speaking, so I will not trade. Oh, okay, I see what you mean. So yeah, ideally, look, if it presents itself. The first, like when I'm looking for the first sweep, it's happening early, like London, you know, between 7 and 9, I'm looking for that first sweep. So typically, yeah. So my first entries will be London. Okay. And then that second entry does usually come between around New York Open. So between 12 and 2:30 London time, that you may get that sweep. If it doesn't happen at London, then it's around 12, 2:30. So in some theory, yes, I do use sessions, I guess.
Okay.
But yeah, for this particular strategy, it's like London Open, New York Open for those sweeps.
Oh, okay.
Yeah.
So yeah, I kind of trying to get into those sweeps, because this is not the first time I'm hearing it. I think I've heard it with Jared on an interview, that he is also when trading, he's waiting for the sweep, a liquidity sweep, which is like the breaking the support. And it's, if I'm not mistaken, if it's false break and then market returning. Or,
yes.
Okay.
Exactly. So what it is, it's you know, it's somewhat of an engineered move. I know there's a lot of you know, I know there's probably some ICT traders in here. How many people got in? 31. I'm sure out of those 31, there's a good 5% of you guys are ICT traders. But you know, not to throw any shade on ICT, because you know, I like the guy. I've spoken to him a few times, Michael. The only thing is this is not his strategy, and this was around before ICT had its cult following. Sorry, guys, I'm only joking. It's not a cult following, but anyway, my point is this strategy, this liquidity sweep, has been around for many years. It's like when I got to the desk. When I'm talking about the desk, when I worked on the proprietary trading floor in London. Okay, so you guys can check this. Is not making up shit. I was working for a company called Schneider Trading. They were taken over by Marex Spectrum. Now they're a real proprietary trading floor, you know. And anyway, my point was they taught me this way of trading, and it's the fact that what happened years ago. They say no one really knows the full details, but basically they say how, you know, in London for many years there's always insider trading, you know, manipulation, insider trading, all that stuff. And you know, we've known that for a fact, because there was, anyone that doesn't know, look into the LIBOR scandal. Okay, I'm not going to sit and talk about it here because we've got I'm ready to been speaking for 20 minutes, but go and do some research on the LIBOR scandal. Okay, and you'll understand what I mean, that how there was insider trading. Anyway,
can you type it into the chat just so they know, if they can't, like, they don't want to misspell it, if you can just type it quickly. Thank you so much.
Scandal. Yeah, check out the libel scandal. Have a sort of read into it. There's some like videos on it and stuff. It's very interesting. Anyway, so basically, it's like an engineered move where, this is what I got taught, that these institutions, obviously, they know the retail guys are small. They can easily manipulate and fool the retail guys. When, for example, Eurodollar, say, in a trend, there would be like this engineered move, a little bit of volume, because it doesn't take much to force a quick short-term move in the market. You just need a quick bit of volume going through, which, if you're doing that together as a collective, i.e. a few institutions, you can force the price lower to the downside. Obviously not a sustained move, because you need a lot of money, bam, 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 a lot of volume consistently going through in order for it to be sustained. But just a quick injection, a quick bit of manipulation, trap the weak hands, the retail guys thinking, okay, now we've changed trend. And obviously then that's your sweep. That's the trap for the liquidity for the retail guys, acting as liquidity for the institutions, and then we resume business as per normal. So it's almost like it's like a coordinated move of all these institutions. They're sort of, and then we get that continuation. So anyway, that's all obviously speculation, but it's just what I was taught and the theory behind it, what I was told. Okay, so that's that. So it's very interesting anyway. So it's a very common thing, Jake, and I think in terms of liquidity, it's a known thing, that manipulation, that sweep. So it's definitely worth looking into. It happens with a variety of instruments. It happens in gold as well, that liquidity sweep.
Yeah.
So yeah, check it out, man.
I'm highly interested in it because I'm also trading sentiment. It's retail traders and an institution. So if there's some sort of correlation that if I see bearish sentiment on retail side of the traders, and then also liquidity sweeps probably towards the downside, might be some sort of a signal like it's just a sweep, like just to confirm that liquidity sweep with the sentiment of retail traders.
Yeah, exactly.
Okay.
Yeah. All right. I'll quickly carry on. So, so basically, guys, I took this entry. It was very late. Obviously, as I said, ideally I wanted to be up here. I took it because the case was building just for those shorts with a structure to the downside, and I just thought I anticipated that this is going to break out to the downside. Obviously, it took a while to break out, and then thanks to that higher CPI, we eventually broke out. And I was looking at sort of conservative targets for a 2 risk to reward. It's sort of just ahead of the psychological 16 at 16.10. But I've also got a runner here, and I'm essentially looking for this former top. If you look in the weekly resistance, daily resistance, this top here, basically at 115.80. So just looking for that to come to the downside there and see how we respond to this zone, because that could end up being the new higher low. But I'm doubting that. Someone in the chat is saying to me, do I what are they saying? So is it certain that the rate cut will finally happen, Ken? No. So what I'm saying is that given that inflation's higher, it's unlikely that we're going to get the cuts now. It may be delayed a little bit. Okay, it may be delayed a little bit because inflation's still higher. Remember, if we start cutting rates, there's risk that we bring up inflation even more, because we start lowering costs for people and businesses, and then it can cause inflation. So my point is that we're going to be delayed with these rate cuts potentially, okay? Or we may be getting less cuts. This wasn't a trade that I took. I was eyeing it up here for GU. I was just sort of measuring something out and I didn't quite finish. But basically, same sort of thing here with GU, where we're looking for this downside, okay? So similar to Euro, just keep an eye, guys. We're at risk, really, of again, breaking structure here, all right? We're clearing key support around 34.00, okay? You can see that support here. I guess sort of more so there's the zone. If that gives way, obviously, we're going to see quite a quick slip down to 32.50. All right. Arguably, this is sort of breaking structure, as you can see at the moment. I see GBP is very vulnerable, actually, near term, and I'll talk to you guys about it as to why. But, as soon as we take this out, we're in trouble. As soon as we take this out and we're grinding it down at the moment, we'll probably see another drop, and this could free fall, really, GU. All right. No, Jake probably won't want to hear that. No.
What did you say?
I said you probably won't want to hear that because you've been quite a pound bull as well. GU bull.
Yeah. I was last week. Yeah, I was still a bull.
Yeah. Yeah, man. I'm just thinking because obviously with this latest news for the United States, but then also with UK, just quickly, guys. Sorry, I just want to. I know I'm talking a lot here, so I'm going to let Jake speak. I just want to quickly mention another thing because it's important. So on Wednesday, we've got UK CPI is expected to remain elevated at 3.4%. I personally think this is not going to be as high as 3.4%. UK, you see how like Canada, United States have been dealing with sticky inflation because of tariffs. UK isn't impacted so much by tariffs. So I don't think this number is going to come out higher. The labor market has shown signs of cooling, i.e. wages. Okay, average earnings has been coming down. Look, if you look here, it's gradually grinding to the downside. Unemployment claims has been creeping higher. The unemployment rate has been creeping higher as well, relatively speaking. Retail sales in the UK has been absolutely poo. UK retail sales came in at a contraction of 2.7%. So, and then I want to show you one more thing. Bank of England Bailey. Just want to show you some comments recently. This was, look, what's he saying here? No, here. So, no, this is not the one I wanted. Guardian. It's in the Guardian. Bank of England Bailey, Labour Market, Guardian. Sorry, guys. It's really important just to note this. Let's start this. Don't. Here we go. Yeah. So Bailey last week, excuse me, it wasn't last week. It was a couple of weeks ago. He said that this is the governor of the Bank of England. He warned significant decline in wage growth. Okay. I think I might have mentioned this already, so I might sound like a broken record, but basically he's saying that he's expecting a worsening in the jobs market. So it's really important to note that. So I think we're going to see bad numbers this week for UK. I think we should see some lower inflation there. I'm anticipating. I'm putting my balls on the chopping board here, and I expect wages to come down and a tick higher in the amount of claims, unemployment claims in the UK. So if that happens, guys, GU is going to tank. Okay, we're going to really, really pull back, and like we are breaking structure. We're at risk of just free falling here, to be honest, and seeing a big correction back towards 130. I don't know what your take on that is, Jake.
On the pound dollar.
Yeah, man.
Yeah, taking a look. I'm taking a look right now at the charts, and I don't like it. I didn't know that we actually right now trading below 1.34. But if we actually are, and right now breaking the previous lower low, high low.
Yeah.
About 30 pips from current price. Not even that. No, 10 pips. So
yeah, it's very close.
The potential, potentially we can just get some sort of a small correction and then continuing towards. I have another level at 1.325, which we will probably, with this momentum, reach out in probably this or next week. If the pound is actually, as you're saying, now kind of more towards the bearish sentiment, I need to do more analysis on that, but seeing that momentum, it makes a whole lot of sense.
No, agreed, man. Sorry, Jake. I just laughed. Yeah. Someone said, "Oh wow, so Ken now using Forex Factory on live. Cool." what do you mean by that? I'm so confused. Why is it so cool? Why is it cool, Jake? Am I missing something here?
I don't know. Maybe I'm missing it as well, because you were using Forex Factory before as well, right?
Yeah, I always bring up Forex Factory because I know it's the most friendly, one of the most friendly tools for people, and everyone's familiar with it.
I think everyone was starting on Forex Factory. I'm now more using the trading economics, but back in the day I was using Forex Factory all day.
Yeah. Guys, quick one though. You see what's so beautiful about these markets, right? I personally think the best place to be when we have markets is trending markets. And look at this. How gorgeous is this though? And look, I know it's cliche to say, but if you're a newbie trader, right, find trending markets, or if you've got a pair that you trade, don't train, like ranges can be traded. Don't get me wrong. But where you really can get paid, right? If you're trading, if you've got a low account balance, you've got a low, you're trading, I don't know, if you're trading a small account as opposed to a big account and you want to try and catch nice waves, nice swings, wait for nice trending markets. And, when you're trading these trends, look at it. Look at these, lower, high, lower, low, lower, high, lower, low. Like, look at it, guys. Until we break structure, you just trade that trend. Every time, we print a new lower, lower low, wait for that lower high, and then you swing it. Lower low, lower high, swing it until that structure changes, right? You just follow it. You follow that structure, you follow that trend. You've got the the news. For example, we had that news how long ago now? right? And we've had this trend now. Anyway, sorry, that news wasn't that long ago. Excuse me, I'm getting a bit caught up with time. But my point is, the trend is your friend. Okay, structure is your friend. So follow it. Get those swings in, baby. You know?
Yeah, that's true. That's true. Following the trend is simple but effective. I
Yeah.
mean, most of the old strategies, there's a strategy, and those with the hedge funds back in the day were just based on a trend following strategy. When market was rising, people were buying, and
Mm.
it worked for them. So obviously, it still works.
Yeah. Yeah,
I mean,
man.
the hardest part is just to know when to enter, right? You don't want to enter when the market is about to do a correction. So that's what every trader needs to work on. But I guess, like, generally speaking, every trader can tell what the market is, if it's bullish or bearish, like what's the trend. Then entering the trade, it's hard.
Yeah. Yeah. Definitely. Definitely. I think just like at the end of the day, pay attention to structure. The amount of people that, you know, in the trading community that I've spoken to, and you know, it's been as simple as, not that I've been a godsend for them, but it's just been as simple as, you know, they've got the bias right. A lot of people get the bias right, and the price, as soon as they enter, the price pulls back almost straight away because they're buying in, you know, with the momentum, whatever. And keep in mind, these guys, you know, some of them are swing traders, so they're buying in, and then the price pulls back, and then, you know, the next day it's gone and hit their TP. And I'm sure a lot of you guys listen to this may resonate. And I just said to him, look at where you've entered in terms of structure. Most of them, for example, right? This is what I'm telling you. The amount of traders, I'm telling you, hundreds of traders that I've spoken to have done this. So, you know, they would have got the ball, this bull move correctly with GU, and it entered here. And then the price comes back here. And then, you know, a day or two after, it's gone and taken out their TP. And I'm like, man, look at where you've entered. You've gone and entered at a FOMO. You've gone and entered at the high. It's just like what, you know, a lot of the freaking sheep do when they're investing in crypto. They go and invest at the high. Wait for the price to pull back. Wait for that price to pull back. Get your confirmation that you've got a new lower high, a higher low, and then you go and run to the upside. I know it may sound simple. I know it may sound silly, but it really is. It is simple, guys. I mean, in that sense, just know where you are in the structure, in the market structure. You know, the price is always going to pull back. Don't jump in out of FOMO.
Yeah, that's
Yeah,
true.
man.
That's
Yeah.
true. I don't have any advices like where to enter in that specific scenario. I don't know. I wouldn't know that the correction is about to happen now. Probably what I would recommend to go and study candle patterns, because as you can see, where's the last bullish candle before it, there's a candle which you can see only shadow on it. So that might help you actually, guys, to just go and study a lot of candle formations. But for me, it's also, it is always very difficult to enter. That's why I give up on day trading. I'm a swing trader, because then I can set up my stop loss 150 pips and I don't care about short-term correction. But yeah, I guess I know where it comes from for you guys to, like, being it hard to enter when the correction ends.
Yeah, man.
Yeah.
Um,
Okay. Do we want to move on to another
yeah.
instrument, or
Yeah, Jake,
okay?
Did you want to analyze anything at all?
Yeah. Let me
Just because
see.
I'm talking a
Where
lot
were you
here, I
stop?
think we
GBP
should.
USD, right?
Yeah.
Yeah. Let me see what charts I can have. I mean, a lot of traders were asking about gold.
Yeah, yeah. Go
Uh,
on.
Maybe let me see, but not really a good analysis. Just probably will be doing it live.
Yeah, yeah, man.
Okay. Let
Do
me
your
share the
thing.
screen.
Chachanya,
Sure.
yeah, I am a bit excited today. Do you know what it is? It's because I literally had a whole glass of cola, like I downed it, and then I've literally just drank a glass of coffee as if it was water. So I think I've just had a bit of a caffeine overload, to be honest with you. That's probably what it is.
Okay, let me see.
So
Also said, someone says Euro GBP Chatanya. Oh, okay. In that regard, I'm still okay. Let me share the screen first. Window
Yep.
and trading view. Okay.
Oh,
I don't know. Are you able to see my trading view?
yeah.
Yeah, perfect then. In that regard, I don't know if you're with me, but I still believe that euro is stronger currency than pound. In that
Mhm.
regard, I think the continuation towards the outside is pretty much settled. And look at this trend again, that's what Ken was basically talking about. You've got higher highs, higher lows, and following the structure. And right now, I think we've got sort of a higher high. So in that regard, you might be looking for levels where to enter into that trend. On euro, let me just take this off. Okay, on euro pound, that this kind of let me take a rectangle. This kind of zone doesn't look bad at all. I mean, it's how many pips is it? Probably too much. No, it's 20 pips range. So I think whenever euro pound will go towards the upside, yes, and if I'll be looking for long opportunities, it would be in this range. I think there's also about the golden zone, which is 50 to 61% Fibonacci. So once we break below, that might be a trend reversing if we break also these lows. But till that happens, following the structure, following the trend, and I would be up for buying in the zone. Okay, not any financial advice, but if I'd be trading euro pound, I would be entering in this range. And regarding the, do I miss something in the chat? Yes. What do you think about the sign you should trade during the news? What do you think about this? Do you think it's a sign that you should trade during the news? Okay, I don't think I'm following that. During news. Yes, good question. Jake, please tell us. Is it good to trade during news, especially in the currency pairs?
Yeah,
I get it now. No, I don't think so. I don't think so. You know, it's always like 50-50. You have some sort of a consensus. You have indicators connected to other indicators. So if you are about to trade CPI, then you can take a look at retail sales and other indicators that might suggest you what can be the inflation. But you never know for sure. So I wouldn't recommend it at all. Especially most of the prop firms has this sort of a rule that some prop firms 5, some prop firms 10 minutes before and after the news you can trade. You can open the trade or close the trade. So whenever you open trade, even 15 minutes before the news, then news happens and it going against you, you are going to lose that account. So yeah, I wouldn't be guessing it. I've tried it many times, never work out for me. So it's better to wait for the news. Yeah, then you might say the move is already done. But if it's important news, the market usually go following the momentum for a couple of candles when you're looking at the 1 hour, 4 hour. I mean, for example, PMIs. I'm a big fan of PMIs, European especially. And if you take a look and you go do research on PMIs, you take a look at the previous results. And if it's positive for Euro, especially on French services and German industrial PMIs, then you see that the market get the bullish momentum on Euro for at least 15-30 minutes from my experience, and then few minutes, 5 minutes correction, and then for another 2 hours Euro was performing really well. So yeah, that's one of the indicators, and always for me better to wait for the actual data. I don't know. How about you, Ken? Do you sometimes trade news or?
Yeah, so no, it's a good question. For me personally, I wait most of the time. I will wait for the dust to settle. So I wait for the dust to settle because obviously during the news period, you can get obviously a lot of volatility. Even if your bias is correct, you can get done when things are very volatile, and it's a tricky time to trade if you're trading PA, i.e. personal account, or when you're trading your prop accounts, because it's very volatile, and you have to remember at the end of the day, our prices, the pricing a lot of the time, is coming from liquidity providers, and these guys are dealing with a lot of volume going through in the market, and it's tricky. So you may not get filled, you may get stopped out, you may get slippage. It's just a normal it's just a normal occurrence in the market. So I would typically just allow the dust to settle, see where the market pulls back to or jumps to, and then look for digest what that news means. For example, we've just digested the CPI now. We've seen a big surge higher in the dollar. Allow the pullback, allow the dust to settle overnight, because we're going to have consolidation, we're going to have profit taken, and then look for signs of potential. Are we going to continue that move for continuation? I personally expect us to, but let's see. But yeah, 9 times out of 10 for me, I'm allowing dust to settle. I'm not that guy. I don't know if anyone's seen it on Instagram, Jake. I don't know if you've seen this guy. It's this, I don't know where he's from, somewhere sort of in Asia. It might be China or maybe China. I think he's Chinese actually. Yeah, from his name. And, you know, he's like counting down. And it's like 1, 2, 3, buy, up, and like, and you just see this video, and it like,
and
he's obviously trading NFP or CPI or something, and then like when it gets to his target, he's like, ah.
Oh, it went in his favor. Okay, yeah.
Yeah.
I saw a few
there's that one
videos.
as well.
Yeah, I saw a few more videos. I think it was from India guy who was doing the same and counting from 5 to 0. And then when he said 0, he had longs. And at the time he went to 0, the market just crashed.
Yeah, I've seen that one as well. And yeah, they look distraught, broken.
Yeah. Yeah, that's a perfect example why you guys should not be trading news. I mean, if someone claims that he has, I don't know, high probability on news, it's mostly like you never know.
Yeah. So yeah, man, I agree with you about Euro GP.
Okay, let's take a look at the gold then. I mean, we are still kind of on a gold. We are still kind of in the uptrend. Yeah, but now it's not the gold, it's the dollar. Well, dollar's gaining because it's paired, of course. So while dollar is gaining bullish momentum, we are dangerously close to in that trend line. Probably, even though if we break below, there's still this level of 3.29, I would say, 3,290, 33, that can hold it, can reverse it back. But with the strong dollar, especially today, which I didn't know when I was getting in the live stream, I will probably wait for a second with those longs on gold. Yeah. Do you have any trading plan for gold yourself, or?
I was looking at gold longs, but before we ran into this resistance, there's a lot of resistance at 33, sort of 60, 50 area. And yeah, gold just is still consolidating. You know, when you look on a weekly, we spoke about this before, it's been consolidating really since sort of late April. So yeah, I'm on the fence, sitting back with gold right now until.
Yeah, I'm pretty much interested in what's going to be gold doing when we hit the 3.3 level, because I think this might be kind of strong support. And what's going to happen?
I see that. I see that as well. Yeah, that 3.3 spot on. I agree. Totally agree with you there.
I would wait for this. I don't think that gold will now reverse with this dollar momentum.
No,
I don't know.
No, it's not going to reverse at all. You know, even with, as you say, with the dollar momentum, even with a stronger dollar, it's not, because, you know, there's still a lot of uncertainty in the global economy. You know, a number of central banks have mentioned it because of the tariffs. There's still, look what's happening. Inflation's still sticky in the United States. Inflation's still sticky, you know, in Canada. Like, inflation's still lingering. Remember, gold is a hedge against currency erosion. So gold is going to remain supported. And obviously, we've had a calming down of the geopolitical tensions, i.e. Israel and Iran. But those have only gone away for now. That's just a blanket. It's just being a blanket's been thrown over the top of it. But at some point, that those concerns will flare up again. So people are going to still buy gold. You know, structure is still bullish. We're just consolidating.
Yeah, that's true. That's true. Yeah. Now it all depends on the dollar, to be honest, I think. Oh, okay. So that's the goal. I will probably provide more. Let's just take a look at oil. Kinda, yeah. I remember we were talking about oil when it was somewhere here. I wanted to buy, but then we saw the production decrease, if you remember that. So
correct.
Right now, I still kind of believe that oil can go up, even though there was the production. I mean, we are forming kind of a flag, maybe I would say, on a daily, which is can specialty uh, some sort of a channel. So if we break down, we can head back to 64. But in the long run, I'm still I still believe that oil can perform well. Especially we didn't reach the level 70, which I think can be the case if we will continue in this channel and make one more move towards the upside. If someone would ask me today, I would be buyer, not seller. Yeah, so that's as for the gold. I'm going to take a look also on Australian dollar and a Euro Australian dollar. Okay. Yeah, Euro. Was it Australian dollar? This big bullish or bearish momentum, or was it Euro? Let me just double check, guys. It was actually Australian dollar.
Yeah,
No, you
because
missed
we had the
one,
RBA.
eh?
Remember, the RBA didn't cut
Oh
rates.
yeah. Actually,
Yeah.
I didn't know that it cost that much. I was expecting a little bit less than that. Yeah, I'm Euro USD. Let me see the Euro Australian dollar. Yet for this pair, and we might again forming some sort of a channel, but I haven't been on single live stream session bearish on Euro Australian dollar. I'm not gonna change that. Still bullish, and I kind of like what's happening right here. We bounce off the level 1.77. We break the resistance 1.78. So if we actually break above this blue zone, I might be again ready to buy, heading back towards 1.8. That actually looks interesting to me. And the last pro that I'll just take a look, but I don't think I have analysis for, is the Australian dollar Swiss franc. Oh, okay. Yeah, I've just got two channels because, as you know, Swiss franc, I'm not doing too much of analysis. When I see vulnerable pair like Australian dollar or New Zealand dollar, I just choose Swiss franc and I'll go with it. And right now it looks also really good. With Australian dollar, get a little bit of momentum. I don't think, because I'm still, as I was saying it on the last stream, I'm still bearish on Australian dollar. So also this looks kind of good for me to enter the shorts. What about you, Australian dollar? Do you think that with that rate pause, it triggered some sort of a longer bullish momentum Australian dollar, or do you think it was just temporary and now the Australian dollar get back to whatever it were before? Because we've got still low GDP print. I mean, inflation didn't tick up that much, so I think that it's almost under the control, and they need to admit it pretty soon.
Yeah, I am still bearish. Okay,
Yeah.
I'm still very bearish. And yes, as you said, I think it's just a near-term thing, because that Michelle Bullock, the RBA governor, she's just been known to be hawkish in the past. Like, she has no right really to be hawkish. Like, inflation's cooling. I don't know what planet she's on. Like, I don't know what her agenda is. It's really strange. It's really strange.
Yeah,
I'm guessing.
exactly.
Yeah, I'm guessing she's probably just thinking maybe the labor market's still okay, but yeah, the economy needs those cuts. You know, they're not like a booming economy right now, and there's a lot of vulnerability. So with China,
exactly,
tariffs. So we'll see. She may prove to bite her in the backside when she's cutting too late.
Yeah, I think once they, and especially the blocks, will confirm that the inflation is under control, the Australian dollar is going to get ahead. I mean, all of this pricing, probably all of this bullish momentum, wasn't just the euro being strong, but also Australian dollar, as market participants were expecting Australian or RBA to deliver the rate cut, because the GDP, I think, if I'm not mistaken, you can check, guys, was 0.2% from the forecast, from the consensus, which is kind of bad. So yeah, you said it best. I don't know what she's up to, but that should have been a rate cut.
Yeah, man. Great, senore.
do we have anything else that you would like to take a look at, or do you think we're good for now?
No, I think we're good for now. We've covered pretty much everything. Just obviously, just so you guys know, stocks obviously coming under pressure. Okay, because obviously I mean, stocks, when you look at stocks, they look a little bit vulnerable. Look like we're topping out here with SPX, Dow Jones, NASDAQ. Well, not so much NASDAQ. Tech stocks are just in a crazy bubble right now, obviously largely inflated by this AI optimism, this tech boom. But stocks are obviously a little bit vulnerable. Just keeping in mind, because now markets are potentially not going to get the rate cuts that they wanted. Remember, stocks love rate cuts. So we may not get those rate cuts. So just this bull momentum that we've seen for the major indices, see coming under a little bit of pressure and risk of sort of some deeper profit taken. Okay. Apart from that, that's all I want to know, really, Jake.
Yeah. Perfect then. Guys, also last week we were doing account reviews where we were analyzing traders. When I got frozen for the first time, so we are going to be looking for a new platform because I don't think that's a problem on my part. Nevertheless, I think I've learned new things, how to do it properly. So we can either repeat it this week because I don't think we need to do one more market analysis tomorrow. We pretty much covered everything today, right, Ken?
Yeah.
So yeah, it would be kind of just repeating ourselves. So I'll also again let you know on Instagram. And what I was thinking either to, because we today discussed it, to learn together how to use the strategy with liquidity sweeps, because I'm very interested in it. I'm going to do my own research regarding market sentiment, which I'm using in my strategy. So retail traders and institutions with the liquidity sweep. So either, if you want to, guys, we can do one more session this week, and we can do either account reviews again. So go with the best traders in past 7 days again, like last Thursday, or we can try to learn new strategies. So if you just please let me know in the chat whichever you would like to do this week. I'll try to organize it. At the same time, I'm just reading AJ a question. Do you know what, AJ? I'm going to take a screenshot because this is not a question for me. I would say this is a question for the JV, who's our performance coach. But I took a screenshot and I will send it to him, and he will be answering all those questions that we save on our live streams on his Instagram page and eventually on EdMarket's YouTube in the form of Instagram Reels and YouTube Shorts. So whenever I'll try to push your question, to be honest, to as fast as possible. So just either follow JV on Instagram, or if you subscribe to EdMarket's YouTube channel, your questions will be there very soon. Okay, Ken, if you want to, I think I'll just speak to the chat, whatever we want to do this week as a live stream. So if you're in a hurry, you can go as you wish.
Okay. All right. Cheers, Jake. Cheers, traders. I'll catch you.
Thank you so much, again, for sharing your analysis. I'll see you next week.
See you next week, buddy.
Bye-bye. Okay, so guys, just before we finish, let me just quickly read the chat because account review, this session, all great, London, and appreciate the knowledge. Okay, perfect. Learning the liquidity sweep will be awesome. Yeah, kind of, it's like 50-50. I'll probably just create an Instagram poll on my stories because also Chaitanya asked me about my strategy. I mean, either yesterday or no, on Thursday's live stream. So I'll be probably doing a live stream on that as well to see the custom indexes which I have here. Maybe it might be helpful to you because those are formulas which gives you the index of a currency with the same composition, so you know exactly what is right now a strong currency, what is right now weak currency. At the same time, this helps you if you want to learn about fundamental analysis. At the same time, I'm using the market sentiment, so I can talk about that. That's option number one. The option number two is go with an account review. Those of you who didn't participate last Thursday, basically we pick or choose the list of 30 best traders in the past 7 days, and we go to the EDX dashboard and we take a look at the statistics. Or option number three, which is just learning new stuff, because I'm also trying to build more strategies. I'm a swing trader, so I'm trying to get into day trading, day trading scalping, because most of the EA traders are day traders or scalpers. Also, guys, you in the chat, most of you are scalpers, as I got it confirmed last time. So we can either learn new strategy, account review, or I can just quickly hop in and share my strategy. So let me just quickly read the chat. And also, what day is the best for you? I'm suggesting the Thursday, which is tomorrow. Most of the traders are just focused on trading mid of the week. Wednesday, we've got a lot of volatility. And Thursday, day before the Friday, we do live streams during the evening. So 6 p.m. UK time, markets already lost the volatility. So I would do it on Thursday. Account review seems good. 1 week account review, the next learning with new things. Okay, perfect. So it seems like an account review. So yeah, let's do that. Just to be sure, I'll create the Instagram poll, and you will let me know which one you want to do. But I'll be counting on account review, so I'll prepare till Thursday the list of top 30 traders, and at the same time, I'll prepare a list of the traders with those who kept their accounts for longest, because you suggested it last time. At the same time, traders with the smaller payouts, but again, trading the same account for longer, because that was actually a really good tip. I don't know who said it, but it was a brilliant idea. Okay, so that would be probably all from me today and Ken. Thank you guys for joining in. Thank you guys for participating, for being active. We do really appreciate it, as we're trying to build a great community on Eat Markets YouTube channel. And I'll probably post this story tomorrow morning in London session. So just let me know what you want to do. Thank you guys, and I'll see you on Thursday. Till that, best of luck in trading and take care. Okay.